Welcome to a new episode of the Opening Bid Unfiltered podcast. I'm Yahoo Finance Executive Editor Brian Sazi. Like I always say, this podcast will make you a smarter investor. And if you do not come away a smarter investor after this episode, well, I mean, you may have to reconsider what you are doing in markets. Right now with me is Perella Weinberg CEO Andrew Bednar. Andrew, good to see you again. It has been a while.
Thanks for having me.
Researching you and your company, it takes me back to like my analyst days of crunching numbers and thinking about discounted cash flow. Talk to us a little bit about your career, because you've worked on some major deals. Have you had any time to reflect at this point, or you're still like, oh my God, I need to get that next deal done?
Yeah, thank you, Brian. Yeah, we're still very much heads down. I don't spend a lot of time reflecting too much on my own career. I think about more where we've come as a firm. And, for Perella Weinberg, having started now almost 20 years ago with 7 guys in a conference room, both in New York and London, we opened our offices at the same time, June 15th, 2006. We've now grown to 750 people. We've got 12 offices in 5 countries. We've worked with some of the greatest and most well-known companies on the planet on their most complex and consequential transactions that they've gone through. And so it's been, a real terrific journey for us. We've been blessed. We've been very lucky. We've been in a marketplace that's been very supportive of our business model. But I don't spend too much time thinking about myself other than it's a scatter plot. I do get asked all the time about, how did you think about going from business school to law school? How did you think about going from, a money center bank to starting a boutique? And a lot of these decisions are not GPS. Mm-hmm. They're not plugged into some program and you figure it out. Some of them are, out of desperation. Mm-hmm. In the case of, from my own experience, going from business school to law school was because I was graduating business school and I couldn't get a job. So that made that decision pretty simple. And then in starting the firm, I was blessed to be part of a terrific group of founders, Joe and Peter, that, were very much iconic in my line of work. And so it was just a terrific opportunity to start the firm with them. And I'm very grateful we had the opportunity to do that together.
Well, you are being humble, because when I think about doing deals and getting deals done, you go to Perella Weinberg. I've watched your company many, many years, so I will say that up front. But you also mentioned iconic. I mean, talk to us about like the founders, the co-founders of this company, and a little bit of their backstory too.
Yeah, look, Joe Perella is again a godfather of the modern day M&A business, and I think has had an incredible career that spanned 45 plus years. And he decided when he was 65 to start this firm with Peter Weinberg. Mm-hmm. And the way the firm came together, it sort of has 2 strands of DNA, as I call it. It has a Morgan Stanley strand of DNA and a Goldman Sachs strand of DNA. And Peter and I were part of the Goldman Sachs strand.
How are they different?
Well, I think they're similar in that they put clients first. They're similar in that they're incredibly humble. They're similar in that they've just always worked doggedly for others, and that's sort of the nature of the client service business. Like, we're not in this because we're doing it for ourselves. Like, our entire firm, the premise of the firm is putting clients first. And so I think that the important part of how we've come together is that they had a similarity of approaching this firm, which was put clients first, take care of your people, and the rest will take care of itself. And that was sort of the founding philosophy of the firm. And we're only in one business. We give advice. So we don't take deposits. We don't make investments. We don't extend credit.
You don't have to worry about crypto.
We don't have to worry about crypto. We have no hedging exposure. We don't worry about, being a regulated bank. And so while our business is complex, which you'd alluded to earlier, like, we are involved in some of the most high profile and complex transactions that are out in the marketplace. While our business is complex, our business model is incredibly simple. And so I think Joe and Peter had the vision of putting clients first, being trustworthy, and that's always the sort of premise of what we do every day is based on trust, integrity, and teamwork. And that's a concept that Peter developed very early on. We all, as partners, have a picture on our in our office of the founding principles of the partnership, and we very much live by those every day. And I thank Peter and Joe for that work.
Your career, you've worked on some huge deals. I mentioned to you before you even started, the Kate Spade deal to Coach. I was still a stock analyst covering that deal. I still remember when that broke, but then also the consolidation or the sale of the New York Stock Exchange. These were like these are big, iconic transactions. Take us inside of the room. What are those days? What are those days like when a deal is announced?
So I always talk about our firm really being a sports team. Like what we do, if you take a step back and fly at a high altitude, you have incredibly skilled people in our firm. They are very intense in what they do. They're very focused. They have to work on a team, but yet have to be, at the top of their game. So the individual performance matters within the broader team. And no one wants to be sort of the point of failure or weakness on a team. And so you collect all those concepts together, and the fact that what we do has binary outcomes. It's usually you win something, you lose something. It's very much that we run a sports team. And so when we're looking at athletes, if you think about professional athletes and their cycle of intensity and then rest, recovery, reflection, get back out and do it again on Sunday, we have a similar concept at our firm. And I always focus on making sure that when you reach that moment of intensity, when these deals are getting done, that is a moment where you have to finish strong. So you cannot run really hard for 25 miles and coast the last mile of the marathon. You actually have to pick it up and kick it into high gear in that last mile when it comes to a transaction, because there's so many forces brought to bear from different constituents around the boardroom to constituents on the other side of a transaction to constituents externally, whether it be shareholders or it could be regulators, could be politicians, could be labor unions. You just have a very broad range of stakeholders in all the transactions that we work on. So our teams go through an enormous amount of intense interaction with their teams and with counterparties. But it's really important when those deals get announced. That's our adrenaline, actually. Mm-hmm. When those deals get announced, you just feel incredibly satisfied. You've
kind of like when we break news. it's
exactly.
the same thing. Yeah.
It's the same concept. And probably every industry has this element of, how do you get what is the source of energy so that you come back out the next day? And yes, we enjoy working as a team. We're a highly collaborative organization, but first and foremost, we're intense and we focus on our clients and getting things done for our clients. That's where there's the ultimate satisfaction. That to us is, filling up the gas tank, or I guess today, plugging in the charger.
It's true.
And that's where we keep coming back out again for our clients.
How does the sports team, how do they deal with stress? These are, like to your point, these are stressful. I mean, it's not like, hey, I'm a CEO of a company, I'm going to buy this other company, it gets done overnight. The stress it's immense. What's their outlet?
So first of all, we never get called on a Friday where someone says, hey, Andrew, I've got something really easy for you, and we're going to announce it on Monday morning. So That never happens. It's always something much more complex and with a high level of gravity to all of our situations. So if you think about the lifespan of a corporate executive, in the life cycle of a corporate executive, M&A situations are among the most stressful and the most consequential. And so we're their Sherpa along the way on all these situations where, again, they have high impact outcome. And we have to go through with our teams how to get them prepared, not only mentally, but physically. Our focus is on making sure that we have the talent and the skill set first and foremost. So that starts at a very early stage in a career in investment banking with us, where we go through a 10-week training program before we even let our new bankers hit the floor. And once they hit the floor, it's constant rinse, repeat. We want to give immersive experiences for our bankers because there's no way to learn this with a textbook. So think of it as flight hours for a pilot. That's probably the best example, where we want to expose them to more and more hours of situational opportunities where they're seeing clients in action. So there's no simulator. That would be the only difference. And you want to make sure you put our younger bankers, as they go through the system, where they're starting to get a lot of muscle memory on what looks the same, pattern recognition on things that they're no longer going to be stressed out about. So their range of activities where they're going to get stressed gets narrower and narrower because they already have been through it. They know what to expect. And that's our job, to make sure that they've got, again, sufficient experience where they've kind of been there, done that. But for our business, it's always the 10% no one's ever seen before. That's really what we're hired for.
Yeah.
And there's no way to completely eliminate that stress, but we do talk a lot about managing it. And especially, it's almost like the principles of energy. Like if you're not transforming it, if you're not transforming stress, all you're doing is transmitting it. So we try to help our teams understand, their stress footprint. I often talk in our town halls and in our group meetings about making sure you get your rest, recovery, making sure you reflect things that may have gone wrong. We want our teams to be very resilient, but I want it to be reflective resilience, not just saying, I don't care about that loss, I'm going to get right back up and get out there again. It has to be a learning experience where you've had failure, because we've all had them. We've got a ton of failures in the business. So.
Yeah, you mentioned that these are skilled workers. Is it hard to find the next generation of bankers to work at a company like yours?
Right now, we're in the golden era for candidates wanting to be in our line of work, at least to start their career. So I think I'll get the numbers broadly correct, but maybe not to the decimal. But we had something around 8,500 applicants for entry-level position with us, and there's about 100 seats.
That's for this year?
That's for this coming year. Actually,
Wow.
The way we'll recruit in the coming couple of months for our class of 27 summer.
Mm.
And then after the 27 summer, we'll decide on offers for the 28 start. So we're always a couple of years ahead in thinking about our workforce management, and we're a growing firm. And so we have to think through, our headcount and what our needs are going to be 3-4 years out.
Mm.
It's not a spot market for us. We have to really think about people who are going to enter our system and be there for a couple of years.
All right, hang with us, Andrew. We're going to go off for a quick break. We'll be right back on Opening Bid Unfiltered. All right, welcome back to Opening Bid Unfiltered here. Having a great conversation with Perella Weinberg CEO Andrew Bednar. A CEO comes to you today and asks you about a deal. What do you tell them right now? And it's a big deal. What's your advice to them?
Well, that depends, obviously, on
the company,
the situation of the company. But I think what you're asking is first, what's the environment like?
Correct.
Like, are we in an environment where deals are well received, or are they not well received? And through my career, 31 years, we've had markets for sure where the receptivity to transactions was lower and the degree of difficulty in getting them done was higher. I would say today we've got the equivalent of, perfect ski conditions. So if you think about the three biggest factors in driving M&A, we've got a very strong equities market, we've got a strong credit market, and we've got a very accommodative regulatory regime in Washington. So those three components, I think, come together and create very, very favorable conditions for more transaction activity. And I think what that does is then gives CEOs a lot more conviction, because don't forget, we're in a business that's not a prediction market. We're in the business where it's a conviction market. So it's not as though you're putting on a stock trade or taking a position on a binary outcome. You're actually going to have to make a long-term decision where it's not so easy to get out if you're wrong. So unlike stock trades, you can kind of get out quickly. This is more like building a house. And once you get in and spend a little bit of time there, if you want to sell it, it's going to take time. It's not as liquid, and there's consequences to that decision. So CEOs need a lot of conviction to get these things done. But we always ask with our clients, because we're less transactional in how we approach our client relationships. We're there with our clients through thick and thin. A lot of things that we do for clients are behind the scenes and not related to a specific transaction, but we are helping them on their most complex strategic and financial challenges. And sometimes that does lead to transactions. And the first question we ask is, what are we solving for? Mm-hmm. So what is our CEO focused on? Sometimes the CEO is focused on growth. Sometimes they don't like their evaluation. Sometimes they feel threatened by a market or a technology. Sometimes they're under indexed to a certain aspect of their business. And sometimes they're in financial stress where they have to think about, balance sheet. And balance sheet may involve reshaping the portfolio where we have to sell something. It may involve a merger, or it may involve new capital coming into the system in the form of equity or hybrid or a debt security. So we cover that entire range of services for our clients. So really, again, my initial answer, now I've gone on very long, but my initial answer was it depends.
Does the CEO, do they want to pull the trigger on a big deal next year? Or we're still living that environment where the CEO may want to pull a trigger on something, let's say, in the $5 billion to $10 billion range?
I think what's happening right now is that as bigger deals get done, it changes the whole frame of reference for a CEO and for their board. And so what a CEO and board may have thought was a big deal at 2, 3, 4, 5 billion now is seeing 15, 20, 30 billion and saying, are we thinking big enough? So CEOs are taking a step back and saying, if we're going to go through all of the work, all of the analysis, all of the risk, all the disruption, and all the the ancillary issues that you have in connection with a large-scale merger transaction, is what we're doing worth it? And I think that's an important change in the dynamic this year versus what we had seen certainly in 22 and 23, which were relatively weak M&A years. 24 was a good recovery M&A year, and 25, as I said earlier, it's a spectacular year, and the conditions are very, very ripe for, I think, continued large deal activity. But just to keep it in perspective, there are thousands of M&A transactions a year, and there's about 70, 70, that's it, 70 above 10 billion. But when you start seeing, what was last year 30 or 35, and now that cohort of transactions is double. Every CEO that we're talking to is asking the question, like, are we thinking big enough? And I think that's a very important change as we head into 26, where I think those conditions I mentioned earlier, equity markets, credit markets, and regulatory regime, I think all of those stay in place for 26.
Is, not to ask the canned AI question, but is the AI going to force the hand of CEOs to pull the trigger on these big deals like you're talking about, just because this is such a disruptive technology?
It's certainly, I would say, a disruptive technology. It's a game-changing technology. It's also, I think, a job-eating technology. And we have to be very mindful of that. I haven't seen a CEO, haven't heard of a CEO saying we need to do something because of AI, other than those that are in the direct line of fire with the AI technology. But our clients that are outside of tech are not scrambling to do deals because of AI. I think they're continuing to implement AI into their organizations and into their supply chains, into their labor force, whatever their focus happens to be with AI. And it is changing the way business is done in every client that we are blessed to work with. So I think that is a trend that will continue in our own organization at Perella Weinberg. We are implementing AI. We have, I would say, 3 phases of that. The first was really just to give all of our teammates an AI assistant, which seems simple, but we can't take it off the shelf because, number one, we're a highly regulated business, so it's not so easy to just put these things in the field. Secondly, we're insanely focused on confidentiality.
Of course.
And so we just can't afford any little hiccup, not even, a gnat's eyelash off the mark on confidentiality. So when our IT team told me that we can now solve for that, then we allowed it into the field. And now we're in the second stage, which is really efficiency. And so we're training the AI assistants now to be much more finance savvy and to be much more responsive to the things that we need as finance professionals. And then the last stage will be productivity, which I think we're still quite a bit of ways off from, where it could actually help us with some idea generation and with thinking, around the corner with our clients. But right now we do no work that is client facing for our AI technology. We do nothing that faces the client. I'm just not comfortable with it yet.
For 2026, where do you think the big deal could happen? I almost feel like people have forgotten about industrial companies.
Yeah.
I mean, we've been so focused on these big 7 magnificent tech companies and what they are doing or not doing. There's 493 other companies out there. A lot of them are great industrials. They generate a lot of cash, and they're trading at multiples well below the Mag 7. I mean, there has to be value. And from an industrial perspective, there might be an opportunity for even carve-outs because their company's not being valued properly in this crazy market.
Yeah. I mean, everybody focuses because of the natural concentration of the S&P and the Mag 7, but you have 150 companies. They're actually over 100 billion in the S&P 500. A lot of them are industrial companies. So I think you're spot on that there's consolidation opportunities within that market, but also even below $100 billion companies. Then you have several hundred that are actually going to be above 5 and 10 billion. that have tremendous opportunities for consolidation. So the old business of things that you can kick and throw in industrial America and in global industrial businesses, I think those are ripe for continued M&A activity, and we see that opportunity. I think you're going to see more in tech. I think you'll see more in healthcare, and I think you'll see more in energy. And those are the typical triumvirate of M&A activity has been around those three. But also, you've seen a lot of activity in financials. You again have an accommodative regulatory regime for bank consolidation, certainly at the regional level that's happening. So I think in the 26, 27 timeframe, you're likely to continue to see broad-based consolidation. I couldn't tell you right now that I favor any one market. I think they're all very active.
Last one here. How do you deal with having tough conversations with CEOs? CEOs, they're hard chargers. They don't get these positions by some grace. I mean, they climb the corporate ladder. How do you deal with them maybe not agreeing with your assessment? How do you have those tough conversations?
So I think first and foremost, we're really good listeners. And part of that is listening to what's being said, but also what's not being said. And I think also being able to zoom out and fly at a high altitude and maybe see, some of the landscape that is going to be helpful for our CEOs to appreciate. And we rarely get into arguments or blown up disagreements. I don't think that would be a fair characterization of when we do disagree. But one of the things we always tell our clients up front is that, we're not here as a rubber stamp. You hire us because you want our opinion. We always give you an honest opinion. It's always based on our expertise and our experience. And so we come with a lot of credibility to, be that Sherpa that takes you through a really complex transaction. And sometimes CEOs will say, look, I understand that, and I'm going to move in a different direction. But they do that knowing that we fully inform them. And I think if we've fully informed, I think we've done our job. We can't always expect for the CEOs to follow exactly our advice. But I think that over long periods of time, when you're building these relationships over 10, 20, 30 years, there is an element of trust. And it's like any relationship. You're not just supporting each other by saying yes, yes, yes all the time. So if you think about a client relationship, like any of your other relationships, you're going to have moments of disagreement and differences of opinion. And we hope to bring our perspectives to bear so that at least they're understood.
I hope you have not missed doing any mega deals in the 30 minutes we've been doing this. It feels like I'm keeping you away from closing something or doing something. Andrew, good to see you again. I appreciate it. Andrew Bednar, Perella Weinberg, CEO. Appreciate it.
Thank you.
All right, and that is it for the latest episode of Opening Bid Unfiltered. Like I always say, keep those comments coming in there on YouTube and all the love on all the podcast platforms. Love to hear from you. It makes me better at doing these interviews. Talk to you soon.